a loss of 2%. Now from the lower level, it has recovered towards the end, but close is not that convincing. Small cap clearly underperformed, and many of the stocks, if you were to look at the recent swing highs of the last 1 month, from one month high, many of the mid cap and small cap stocks have actually corrected more than 15 to 20%. So there has been a deterioration in the performance of the small caps and mid caps, and most of the investors and traders have seen and witnessed a correction in their portfolio as well, because recently what has happened, like many few large cap stocks have shown the strength, and because of that index is not falling, in fact it is making highs, but mid cap small caps are is clearly under pressure. That might be because of the March month's nature, and the 11th month consecutive rise we have seen in the mid cap small cap, stellar returns given by the entire space, and that is why this could be a profit booking month for the small cap and mid cap. But the benchmark indices are closing at all-time high. That's a good sign. So very strong setup, we can say, technically for the Nifty. And for Bank Nifty also, I would take you to the Bank Nifty chart. Now this is a Bank Nifty daily chart. As we can see over here, this is a trend line which was coming adjoining the previous swing highs, and this is a clearly breakout. So this breakout was seen on yesterday's session only, and after that we have seen follow buying in today's session. So Bank Nifty is yet to make its all-time high, which is placed around 48,600 odd level. But the way in it has recouped from the lower levels, especially in the last 6-7 session, it has been remarkable, and Bank Nifty has started outperforming the Nifty after a long time. So what has happened in the derivative side, we have seen that major additions of open interest was there in last 2 sessions. So for 2 consecutive sessions, we have been witnessing a 15% long build-up in Bank Nifty. So that is a huge. Generally, when we see a long build-up in Bank Nifty or Nifty, it usually remains around 5 to 7% normally. But in Bank Nifty, we have been witnessing a open interest build-up of 15% yesterday, and day before yesterday also 15% addition on the long side. So if price is rising and open interest is also rising in a strong way, then we can say it is a clearly a long build-up. So despite the weakness in the broader market, Nifty and Bank Nifty managed to do very well, and it is not surprising, because we have already mentioned the kind of movement that we expect in our monthly reports. So I would like all of you to consider our monthly and weekly reports that we published every week and every month. And they recently on Monday before market, we came out with a March month monthly technical outlook, and I would like to all of you to go through this report. And this is a report which we published on the Monday morning before market. And these are the few slides I would again like to share with you, and take what was the view we mentioned in the starting of the week. And in most of the way slides we have whatever we have mentioned, the view is vindicating in that sense only. So this is the first slide which we mentioned for the Nifty. So in the Monday morning, we wrote that this is a chart breakout on the Nifty, and the pattern breakout suggests a target of 23,000 to 23,100. But immediate target which we saw for the Bank Nifty was the 22,600 to 22,700. So in today's session, we have seen that Nifty has already reached a target, the level of 22,500. So we are just 100 points away from the mentioned targets, which was 22,600 to 22,700. But overall primary trend is positive. Nifty has hit an all-time high, and the pattern, if you were to consider on the weekly chart, it gives the target of 23,000. But as of now, I would like you to consider only first target, which is around 22,600 to 700. Now this is the overall weekly monthly setup on the Nifty chart. So monthly setup has been higher tops, higher bottom. So every time we saw a correction, that was absorbed at the lower level, and again we saw a resumption of an uptrend every time. So let me come to the point here. So basically, this was the correction in the in 2022. This was absorbed at lower level, and again started the uptrend. This was again a correction for 4 months, and again it started going up. So this was a 3-4 months consolidation, and again Nifty broke out and made an all-time high. So overall primary trend of the Nifty has been bullish since April 2023, and that trend is continuing. Now about bank Nifty, we mentioned that it is a it found a support at the crucial trend line. This was a long-term trend line which starting from the June 2022, and this trend line was almost here. Couple of weeks back, we saw that bank Nifty found support there and bounced back, and this was the breakout level, which was 47,650. And we have seen that bank Nifty has reached above that level, and clearly breakout is visible on the charts. So we have reached above 47,650, and we can expect bank Nifty to reach all-time high, which is around 48,600 first, and beyond that we can even expect a target of 49,500. So overall, for the large caps and for the bank Nifty and for the Nifty benchmark indices, the market is quite strong and technical setup is still strong. So we have to remain with the trend only. So this was another example and evidence because of which we were actually bullish on the Nifty and Bank Nifty. And this is nothing but the FI's long to short ratio in index future. So it combines the data of Nifty and Bank Nifty futures, and FI's position in the index futures were more on the short sides. So FIs was still carrying the more shorts than longs in the index future. Now this ratio reached to 0.53. Yesterday also it was almost 0.54, 0.55, which is below 1. So FIs are still carrying shorts, and that's where we can expect some short covering, the sharp short covering by the FIs in the index futures. And I think most of the shorts were there in the Bank Nifty, and that's why Bank Nifty is witnessing this kind of movement. So still, after today's session, we have to see where this FI's long to short ratio has reached. But this was one of the reason why we became bullish for the Nifty and Bank Nifty for this week. And the same is getting vindicated. Large caps and Nifty Bank Nifty are outperforming the broader markets. Now here is another interesting thing I would like to share. So this is the seasonality chart. So I have taken the all months January to December, and this is the history of last 15 years. So if you were to consider the March month performance, so in the March month we have seen that in last 15 years the success ratio has been fairly good. The average return of March month has remained 1.73%, which is can be considered a strong ratio, and most of the time we have seen that it has remained positive. If you were to consider the positive months and negative months, so success ratio of closing in green in the March month has been has been high for the Nifty in the month of March. So this was the one of the reason why we are expecting the continuation of an uptrend in the March month also as far as Nifty is concerned. Now let us go to the next slide. Now when it comes to the mid cap and small small caps have been actually consolidating in this narrow range for last 4-5 weeks, and there has not been a significant up move in the mid cap segment as well as a small cap segment. This is a small cap chart, weekly chart. This is a mid cap weekly chart. We can see it is not moving for last 4-5 weeks. So basically the kind of consolidation and the underperformance going on in the mid cap and small cap, and the same thing is continuing in this week also. Now this is one of the observation which can be considered an intermarket analysis and the broader market analysis also. So now this is a Nifty 500 weekly chart, and we can see that Nifty 500 index has risen in last couple of months, and the same way we can see that the stocks above 200 DMA has been falling here. So from the NSE 500, if you were to look at the stocks, the 500 stocks, percentage of stocks from the NSE 500 which are above the 200 DMA are actually falling. That means very few stocks are holding the Nifty 500 index on the upside, and the stocks actually majority of the stocks are going on the downside. They are weakening on the charts. So that means that there is a divergence. There was a divergence, and we can consider this divergence as a negative sign for the broader market. And we wrote in our monthly report that expect a broader markets to underperform Nifty in the short term. And same thing we can see for the markets for last 3 sessions it has been happening that Nifty and Bank Nifty are not falling. In fact, they are making new highs while broader market witnessing a heavy correction. So same thing was mentioned in our monthly report, and that's why we insist all of you to go through all the reports that we send, which are very helpful for you as well as for your customers. Now let us move to the next slide. Now this is another thing which is actually working out in this current market scenario. Now we have written that expect private sector banks to outperform Nifty from here. So this is the ratio chart of Nifty private banks divided by Nifty. So we have divided the value of private bank index with Nifty, and this is a chart of the same. And now as per this chart, the private bank sector against the Nifty has reached the long-term support, and according to that we expected a sharp bounce back in the private sector bank and the sharp outperformance from the private sector bank in the beginning of this week. And same thing we can witness because Kotak Bank and the ICICI banks and SBI of the world, they are actually doing very well and outperforming the Nifty. Now this is one of the another example why actually mid caps and small caps are falling, and this was one of the evidence which we mentioned in the report. This is a ratio chart of Nifty divided by Nifty 500. So this is the monthly ratio chart. Here we have taken the value of Nifty divided by NSE 500. So if this price is falling, this red line is falling, that means Nifty is underperforming the NSE 500. Now we saw that this was the observation that the ratio chart of Nifty divided by Nifty 500 reached an all-time low level. That means the inception of NSE 500 was there in 2005, 2006, and since then we have never seen Nifty underperforming NSE 500 in this way with this intensity. So it reached the all-time low level. That means the mean reversion could happen, and the same can be seen in the RSI oscillator also, which is an oscillator which is indicating that there could be a mean reversion and Nifty could again come up and start outperforming the NSE 500 index. The same thing which we see in this week, and our view of Nifty outperforming the NSE 500 is getting vindicated as well. So basically this was it for the indices here, and as far as levels are concerned, I would like to tell you the levels again for the Nifty and Bank Nifty. So today's low becomes the very strong support. We also mentioned in our monthly report that the first support we see for the Bank Nifty is around 22,200, and today's low was 22,224. So this becomes the strong support, and unless we see this level breaking on the downside, we should continue to hold on the long position in the Nifty for the target of 22,600 to 22,700. Once we see Nifty closing about 22,700, then we can expect our pattern target, which I showed you before, which is around 23,100 as well. So as of now, the trend of Nifty is clearly bullish. Today's low becomes the strong support, which can be utilized as a stop loss level also. Now let us discuss the levels of Bank Nifty. Now Bank Nifty, there is a trend line breakout, and the immediate resistance is nothing but the all-time high, which is around 48,600. And as far as support is concerned, we feel that 47,200 is a crucial support and can be utilized as a stop loss in long position. So unless we see Bank Nifty breaking 47,200 on the downside, long should be held, and on the upside 48,600 is the first target that we see, and above that we will reach the uncharted territory, and in that case we will continue to trail our stop loss on the upside. So as of now, 47,200 should be kept as a stop loss in spot Bank Nifty. Now as far as Nifty small cap and mid caps are concerned, as I suggested before, as we discussed the different rationales and ratio charts and the kind of underperformance which is there in the small cap, we need to be cautious in mid cap small cap space. It might happen that Nifty and Bank Nifty continue to rise, but your portfolio of the mid cap small cap will not rise. It might happen because we have seen 11th months consecutive rise in the small cap mid cap indices, and after such a strong performance they might see a phase of, let's say, consolidation or profit booking come from here. So as far as small cap mid caps are concerned, we are still cautious, and I think we should stay away from this because we expect that risk reward ratio and margin of safety is there in the large cap, not in mid cap and small cap at this point of time, because there are couple of evidences which are giving a strong sign that we should lighten our commitment in small cap mid caps for this March month, and we should stick to the large caps only, where we can earn some alpha in the trading. Now I would like to share the sectors which we like technically. So sectors that are looking strong, obviously the bank nifty is looking strong, where we have seen witness some sharp long build up in the derivative segment, as well as the technical breakouts are there. So bank nifty, both private banks and PSU banks can participate in the rally. The another sector which is actually reversed today is the Nifty IT index. So after a healthy correction from the February month high, now today we have seen that Nifty IT index reversed north and actually has formed a bullish hammer candlestick pattern on the daily chart. So what we see is that a stock like large cap stocks in the IT space and mid caps, only large cap I would recommend, that only large cap IT stocks can show good strength from here. So for trading long, one can look at the Nifty IT index from here as well. The another sector which we like is the Nifty Pharma. So basically, Nifty Pharma has given a breakout from the consolidation which was there for last 3 weeks. So Pharma index is also looking strong, and in the coming days we can see many of the stocks like these many stocks are still looking strong and still trading at their all-time highs. So definitely Pharma is the index along with the IT which can perform well. So IT, Pharma, then banks can perform well, and even auto has been the outperformer in recent days, and today's close of auto index is at all-time high. So these are the 3-4 sectors you should concentrate for generating some alpha, and we would recommend you to stick to the large caps out of these sectors, so that will be safer because margin of safety is there. And small cap mid caps looks dicey. I'm not saying that all small cap and mid caps will fall, but we have to be very vigilant, and we have to be very selective while going for the trading in the mid cap small cap space. So better to select the stocks from large caps, and auto, pharma, IT and banks, these are the 4 sectors which are looking stronger on the charts and lead the markets from here. So I hope you guys have actually written down the levels, and if you have not, then I would like to go through the entire recording of this webinar and the monthly report, technical report, which we recently published on the Monday morning. So you have access of that and go through it. So you will realize what we want to see and what our view is for this entire March month. So this is what I wanted to share on the technical side. And now, Omkar, we can open question and answer session round. Omkar, are you there?
Yes, Vinay. So, dear customers, as we are open up for the question and answer, so you can type your questions in the chat box as well as in the question box. So, Vinay will answer for that.
Yeah, so I can see one question, Omkar, here. Which companies in pharma looks best in general? So basically, large cap pharma space is actually outperforming. And if you were to look at the stock like Sun Pharma, so I would not be able to comment anything directly for the from the stocks, but you can consider majority of these stocks which are there in the large cap segment. So you can look at the stocks which are under our coverage. So Sun Pharma and Zydus Lives and Ciplas of the world are going actually very well technically. So you can consider and go by the coverage which is there in fundamental side. But yes, you can stick to the large cap pharma stocks. That would be better for you. So the another question comes in at Tata Motors. So is it a good time to enter Tata Motor? So whatever announcement which came yesterday, it was a clearly positive announcement, and the auto sector is at all-time high, and Tata Motor is one of the stock which has taken the lead in the auto space. So no doubt we have seen some profit booking coming from the yesterday's high, which was 1065. So on dips you can accumulate. The overall trend of the stock is very strong. We need to see whether it is there in our coverage or not, but I'm just sharing the levels. So it has recently risen a lot, so it is better if you go by the our fundamental rating. We need to review whether it is there in the coverage or not, or what is our rating. But technically it is strong, and 1065 is a strong resistance, and I would like to share support, and support I can see is around 950. So accordingly you can play. I can just share the trend, support and resistance for the Tata Motors. So stock specific I would not be able to comment much on any of these stocks. So why these private banking stocks are lower? So basically we have seen that there is no there is a reason, there is no doubt about it, but as of now we see some out performance coming in the private sector banks. In the stock like Kotak and other private sector bank has started recovering from lower level. So there are such times that underperformance results into outperformance also. So we can expect recovery. Many of the stocks are trading around their 52-week low. They can see some recovery, but right now private sector banks are going strong and they can rise further from here. So another question comes in is view on PSU banks. Can we expect to perform further? Yeah, so PSU bank index has done very well. In fact, if you were to look at this monthly chart of PSU bank index, we can see here that in last 7-8 months, PSU bank index has outperformed the private sector as well as the bank Nifty and as well as the Nifty. So PSU banks have been into limelight for last many months, and that trend is still continuing. Large cap as well as the small PSU banks are continuing their uptrend. So overall, positionally, we believe that PSU banks can still outperform. And if somebody is invested in PSU banks, they should continue to hold on to the long position as far as medium to long term trend is concerned. So for long to medium term, definitely one should continue to expect PSU banks to do well in the coming months. Yeah, so Naresh is asking that I did not receive any report on Monday where I need to get regular updates. So basically, we shared this report in the early morning before 8 o'clock on in the research group of WhatsApp. We also mailed in the research calls. All the dealers and all the branch managers are getting these reports. So on Monday around 8 o'clock, we shared this report. And if you are not getting mail, then you can also go to the website, and in website you can get the same report in the market commentary section. In the research tab you will find this monthly technical report. So you can always find on the website, you can find it on our mail, and you can also get it into the research group of WhatsApp. So we are sharing in all the channels that we have been sharing for last many years. So no stock specific answer I will give, because many of the questions are coming on the stocks, so I would not be able to comment. But if you have positions stuck in those stocks, you can always come back to us during the market tomorrow. We will definitely help you out with the support and resistance and the trend of the trend of that particular stock. And you can always ask these questions in the research WhatsApp also, research group of WhatsApp also. We can help you out in that sense. So in this webinar, I would not be able to comment buy, hold or sell in any of the stocks that you have mentioned. So Omkar, that is all. We have already exceeded the time limit, and I would like to end and conclude this webinar. And last comment I would like to make here is that the broader markets are not that strong as of now. Nifty, Bank Nifty, and large cap stocks offers a better risk reward ratio for the month of March. So better to stick with the large cap stocks only, and Nifty, Bank Nifty only. Mid cap, small caps are very risky as of now, so they might see supply coming in anytime. So better to stay away and lighten the long commitments in a mid cap, small cap space. That's all. That's all, and that's what I wanted to share. Thank you all to join this. Thank you everyone. We can close this webinar. Omkar.